Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Bureaucracy is what happens when processes outlive purpose. Forms exist to ensure no problem is solved quickly. Global supply chains work perfectly until the world shows up. Diversification sounds boring until concentration becomes expensive. This time is different, is history's favorite opening line.
Sensex EPS growth is down to 1.3%, the slowest in nearly 5 years. Translation, profits aren't falling off a cliff, but they've definitely stopped climbing the stairs. Trailing EPS is actually lower than a few months ago, which tells you this earnings season is more treadmill than marathon. Costs are sticky, demand is patchy, and profit growth has gone from double-digit swagger to single-digit sobriety. Valuations still assume a comeback. Earnings having RSVP'd yet. As Paul Samuelson once joked, the stock market has predicted 9 out of the last 5 recessions. India wants to out-China China, but the data says that's hard without China in the room. Chinese FDI into India has collapsed to near zero, yet global supply chains still quietly orbit Chinese capital, components and scale. The irony, India's export ambitions, especially to the US and Europe, improve when Chinese firms plug into the ecosystem even indirectly. Protectionism sounds tough, but pragmatism pays the bills. If you want to climb the manufacturing ladder fast, sometimes you borrow your rival's ladder. About 58% of India's unicorns live in consumer, retail and finance, and not deep tech. Strip away the branding and the startup boom is powered by wallets and not whiteboards. Real tech, AI, core platforms, frontier IP is still a thin slice. We are excellent at selling, lending and scaling demand, less so at building hard technology. The IT superpower story isn't false, it's just mostly services and not science. Great cash flows, modest code modes. India has a lot of ultra-rich people, 4th largest globally, but per capita it barely shows up. Just 0.6 ultra-rich per 10,000 people, putting India nearly at the bottom of the table. Translation, wealth creation is real, but highly concentrated. The economy is minting billionaires faster than it's minting broad prosperity. This isn't a rich country problem, it's a distribution problem. The pyramid is getting taller and not wider. The world's biggest central banks are sitting on balance sheets the size of small planets. Europe leads, China and the US follow close behind, and Japan is still running monetary policy like it's 1999. India sits mid-table, not tiny, not gigantic, quietly conservative while others went full buffet during the QE era. Big balance sheets mean power, but also baggage. Unwinding them without breaking markets is the real trick. Liquidity was easy to print, credibility is harder to shrink. Google's Gemini is quietly turning into the fastest climber in generative AI. Market share is up to 22% from 19.5% just a month ago and 13.3% 3 months back. That's not drift, that's distribution doing its job. When you own Search, Android and Workspace, growth looks like less innovation and more like gravity. OpenAI still leads, but the gap is no longer a big gap, it's a moving target. As Andy Grove famously said, only the paranoid survive. In AI, paranoia comes pre-installed. The oil leaderboard looks crowded, but control is anything but. The US leads the pack on sheer volume. Saudi Arabia still holds a swing vote. Russia keeps pumping through sanctions like a misplaced memo. Everyone else, price takers and not price makers. The real takeaway isn't who produces the most, it's who can change production without breaking a sweat. In today's market, oil prices aren't set by barrels alone, but by spare capacity, geopolitics, and who can afford to wait. Production shows muscle, flexibility shows power.